It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
So we got that. The last weekend of January was over 70%. The first weekend of February was over 70%. Then the rate rise, and then bang, it went under 70% into the sort of balanced territory. And we've just seen it declining all the way since then. And in fact, the weekend before Easter, we had record, it was nearly 1,900 properties listed for sale by auction in Sydney on that weekend. That I can't recall a weekend when it's been that high. 1,500 is normally seen as huge, right? And nearly 20% of those are withdrawn prior to the auction, and that's usually because the owners and the agent, one or the other or both, are not confident they're going to get the result that they want. That shows vendor confidence waning, as well as obviously clearance rate dipped to 55%, showing that that's well and truly a buyer's market.
Yeah, what about the vendors at the moment? Because, as you say, you know, some of them were pulled out of the auction. There's still this headspace, isn't there, where people just seem to think that their properties are, you go back 12 months ago, they're in that range when they're clearly not. It's just a cycle, though. It takes time for them to catch up before they fully sort of grasp reality.
We find that whenever there is a major change, so an external shock, I guess, that impacts the property market, we find that any campaigns that are sort of caught out in the middle of that, that's a bit unfortunate, because those owners start off with one set of expectations and then something shocks the market, which means that that set of expectations is not necessarily going to be delivered on. And so then they've got to decide, well, do I want to meet this new market or not? And so that's why you will see that level of, or that percentage of properties that are withdrawn from market, you will see that spike under those circumstances, because those people don't necessarily have to sell. And I think too, that's the thing about established markets. If you're looking at a market where there's a lot of, properties being bought off the plan, for example, they're only a few years old and people are hit hard times, you're going to see a lot of stock come on the market. It's all very similar, very homogenous, and a similar price, and a lot of people in a very similar debt situation. Same with house and land packages. But when you're looking at those established markets of, inner and the middle rings of Sydney and Melbourne, for example, people don't have to sell necessarily. I guess those last in with high debt might feel extraordinary pressure, might have to, but that's not the majority of those markets.
Yeah, and with this particular shock, you're talking and interacting a lot with investors. What are the investors telling you in terms of buying stock at the moment? Are they saying, whoa, let's just sort of wait and see what's going to happen? This is very unstable. We only have to look at the petrol pump to see how all of that has risen over a very short period of time.
What I find typically is that investors might think they're being logical, but they're often not. In reality, buying in a falling market is a great idea. As long as the market's got fundamentals and you've got long-term objectives and you're able to buy a good asset, then you can ride out these bumps in the market over time, right? But most investors don't look at the property that way. They look at, where can I get an immediate gain? And that's the reason you've seen a lot of investor activity actually in Melbourne. It's one of the reasons why, let's look at Melbourne for a minute. Melbourne's been in the doldrums, has been undervalued, if you want to call it that, for some time. A lot of investors from interstate, people that have got huge equity gains in the last, say, 5-year boom in Perth and Adelaide and Brisbane, for example, they're now turning their attention to buying interstate in Melbourne, because they're thinking the same thing's got to happen in Melbourne. It doesn't necessarily follow, but that's the logic. And they're buying and they're competing in the same price bracket the first home buyers are competing in, because they've all been recently incentivised by the federal government with this 5% deposit scheme. So you've got sort of a perfect storm. You've got first home buyers and investors all piling into one market. It's very buoyant in Melbourne, that lower quartile, whereas the top quartile has experienced price falls. So it's a tale of 8 cities, and within each city there's a tale of many, many different markets, and the behaviour of buyers and sellers will be dependent, I guess, on what's happening around them.
First home buyers, they're pulling their hair out at the moment because of these investors, interstate investors. They're zooming into Melbourne, they're buying product left and right, and they are cancelling out a lot of these first home buyers trying to get into the market there.
It is making it really difficult for first home buyers. There's no doubt about that. One of my other businesses is Home Buyer Academy, and we have an online course and mentoring program for first home buyers. And we're talking to people in the trenches, and we have quite a few people buying in Melbourne who are, telling us their stories of how they're watching prices move in front of their eyes. So again, the headlines might be saying prices are falling, but that's not their experience on the grounds. But what we're teaching first home buyers is that there is a process that they need to learn and to go through. And we're coaching them on a weekly basis about what to do when they're priced out of a market, how to recognize that they're priced out, how to not let that overcome them, how to pivot, how to make sure that they don't sort of knee jerk and make silly decisions. So a lot of clarity is required, persistence, don't give up, but also recognizing what's going on around you, measuring that and tracking that and responding accordingly and pivoting when necessary.
Let's fuel your passion for property together. Join us, along with our industry experts, to help inspire and inform your next real estate decision.
We seem to be marching into total madness. In fact, author Michael Wolff has claimed that Donald Trump once said that his motivation for the presidency was to become the most famous person in the world. I mean, how scary is that? That mindset is fueling fear about world decisions being made by one man with no guardrails. I was talking about the November US midterm elections and how Trump's numbers are so low in approval in the US that the Democrats are going to win the House and win it big. The only problem is that November is so far away. Welcome back on this gloomy sounding podcast this morning.
Well, you're certainly making it sound very gloomy, and I think that's probably because it is. The thing I'd like to note about the gloominess is that it's like we wake up every day and there's a different kind of gloominess. And it's almost like, I don't know about you, but I've gotten to that point where I read it and I go, okay, no worries, because the next day it's going to be something different, and the next day it's going to be something different again. And I almost feel like it becomes empty threats, even though it's obviously not. We just can't work out what's really going to happen next because the man in the White House flips and turns like a fish that's just been caught.
It's a big concern, and there's just no guardrails around Trump at all. They're all yes men. He's basically doing what he likes. So the Middle East and the resulting oil-driven inflation, that is starting to hit Australia hard. Rising fuel, you've got the energy crisis, the food costs are adding pressure to an already stretched economy. I want to talk to you about history because it does show Australian property markets pretty resilient. Cycles may slow or pause, but with supply still tight, significant price falls probably remain unlikely. Even during major global shocks, if we go to the GFC, price declines were modest. But I do have to put the caveat in here, Margaret. We are talking of a soft landing in all of this with the Trump element at play.
And I've also seen a lot of predictions. And if predictions do nothing else than get you kind of ready for the next round of what might happen, what I've seen happen many, many times, and back when I had my show on Sky News Business, I certainly interviewed a lot of these people who were making these predictions. There were so many people during any kind of a crisis where there's always been an expert or two or 5 or 10 of them who say property prices in Australia are going to face a catastrophic fall. We may all remember Stephen Keane many years ago, who said it was going to fall by 40% and had some famous bet where he had to then hike a marathon up a mountain if it didn't occur, which he ended up having to do. We had a young upstart by the name of Jordan Wyers. He said property prices were going to fall by 60%. We've had many economists say over the years that property prices are going to face a substantial fall off a cliff, and none of it's ever happened. I recall the global financial crisis where I had a fairly substantial property portfolio that I was building at the time. And while my property values didn't necessarily increase during the global financial crisis, what did happen was I had a significant increase in demand on rentals as people decided to rent instead of buy. And therefore, during that time, I really enjoyed a lot of increases to rental prices. And I know that's not great from a tenant perspective, but from a landlord perspective and somebody interested in investing in property, it was an event that actually was beneficial to me rather than detrimental. Are we going to go now into a period of time where we see a big fall in property prices? History would tell us no. If we haven't had it already, I'd say it's not going to happen this time around. But definitely, we're going to see some heat dissipating out of the market simply because we have so many events happening at the same time. And I think during times when we have uncertainty, people do nothing rather than take the risk. In doing nothing, we'll just see that oversupply maybe start to work its way out a little bit and property prices remaining pretty stable. And in those really overheated markets and the high-end markets, I think we'll see some of those lose a little bit of value.
Right now, we're all sort of navigating, aren't we, these conditions that are shaped by global tensions, particularly Trump with the ever-changing Iran conflict and the flow-on effects smashing the local economy. We don't need it, nor do we want it, but it has been dumped into our lap. It's not the easiest of times, and we need to just sort of catch a break, don't we, over all of this? The 1990s were a breeze compared to living through some of the times, these challenging times that we've got. And if you've got a point of view on how you're managing rising costs or the changing market conditions, what you do is you can send us that voice message below, or you can email us to myrealestatepodcast@gmail.com. I see that Hugh Hefner would have been 100 today. Now, there's a guy that just lived in his bubble, and it was on this day in 1970s that the Beatles broke up. What is your favourite Beatles song? Well, Hey Jude from 1968 is considered the band's biggest commercial success, their best-selling single worldwide. That is their single, not an album, sold over 8 million copies. Well, the Victorian government has been warned that Victoria's first home buyer support scheme is increasingly out of step with the market, with its $600,000 stamp duty cap now covering a shrinking share of Melbourne properties. The Herald Sun reported that instead of helping affordability, it's concentrating demand into a narrow price band, effectively pushing prices higher in that segment. As property values rise across both Melbourne and regional areas, industry experts are calling for a review, warning that the current settings are limiting buyer choice and unintentionally distorting the market at the entry level. Are you finding that to be the case firsthand? Well, let's go to Sydney right now and catch up with Leanne Pilkington. And good morning and welcome back, Leanne, to the Real Estate Breakfast. What is your favourite Beatles song?
Hello, I love the Beatles, can I tell you, but maybe Come Together. I can't believe that it's been all that time since they broke up.
Yeah, well, as a world, we need to come together because of all this crazy stuff that is happening. Yeah, so as I mentioned, this issue of Victoria's first home buyer support scheme, it's pretty simple, isn't it? Too many buyers chasing too fewer properties under the cap.
Absolutely, and it is going to put upward pressure. It's basic economics. When supply is low and demand is high, prices go up. It's very competitive in that section of the market. There's not a lot of choice. And if the government genuinely want to encourage first home buyers, they really need to take a closer look.
Now, there's growing support to lift or remove the cap entirely, allowing demand to, spread more evenly across the market. I mean, as you say, it comes down to economics.
Yeah, it absolutely makes sense to review it. I'm not sure about removing the cap altogether because you don't want to be providing assistance to people who don't genuinely need it. But I do appreciate whatever level you set the cap at, that section of the market will unfortunately start to face upward pressure because there will be high levels of demand.
So this article is talking about Melbourne in particular, but it's really, it's just a case of the way that the market is going, and we'll talk about another aspect of this in just a moment. But it's right across the board, isn't it? Because of the way the market is raising itself in price.
Yeah, absolutely. No doubt about it. Although, we are right now in a changing market. So it's going to be interesting to see the impact of that. But yes, absolutely. Anytime there is a concentration of buyers at one price point, it definitely has an impact.
So let's just sort of drill down for people, especially first home buyers who are finding themselves caught in the shift of the current property market. As you say, buying right now what felt like the peak of the market before these conditions turned. So with rising interest rates and softer demand, the timing suddenly really matters more than ever. And their situation reflects this broader reality, and that is that the market can move quickly and confidence can change just as fast because timing in property is never a perfect science.
And none of us can ever really get the timing perfect unless it's by accident, right? You can't plan those things because the market does shift unexpectedly at times. Although in saying that, all of the first home buyers that bought into the market prior to the latest round of increases would have had a buffer. The bank would not have allowed them to buy and not be able to afford the interest rate increases because we all knew that we were going to start seeing increases sometime in 2026. Certainly there's been plenty of unexpected things happen in 2026, but we were experiencing high inflation and we knew that there would be interest rate increases to come. So hopefully those first home buyers were prepared for that and can financially afford that. But yes, you're right. If they bought prior to Christmas, they probably bought at the peak of the most recent cycle.
Get insider tips from industry professionals and level up your real estate game by unlocking the secrets of successful real estate transactions. We connect you to the best real estate information across Australia. The Real Estate Podcast.